Hello and welcome to another update video about Natgas. It continues to be in the range, however it's pushing against the ceiling here. And in this video we want to take a look at a few options, looking at the shorter time frame wave count as well, doing a bit of micro counting here for the idea that Natgas could break down, but also for the idea, what will happen if we break above that 269 level. That's a resistance level I've highlighted now a few times. Because it broke, well, it didn't, it touched it here as resistance here, and now again the 269 level. It's not a super important level, it's more just like simple resistance, okay? So, but nevertheless, it is the best we've got at the moment as a possible breakout point, and also it is basically the last level before a rally to $3 and possibly beyond could occur. So let's first start with the bigger picture. What we talked about in the previous video is that the time to be completely bearish is starting to be over. I think we've been bearish about Natgas. I can't remember when we started to cover it, but it was somewhere here, I think, in September 22, maybe even earlier. We've been quite bearish throughout the end of last year, early this year, and that was the correct decision because we did come down into the range. And now it's obviously a point where, price did drop. I think it was around about 80% of that high, and pretty much 80%, and it has come down deep enough. So it doesn't need to go any lower, but obviously we need to see some kind of a reversal signal to start to be a little bit more bullish. Don't get me wrong, this can turn around at any time. The wave 2 could also already be in. It's just that we don't have a very clear signal. But in this video also would like to take a look at the indicators, and definitely want to make sure that you understand, yes, taking a look at the bigger picture, this is now the time where we can say for the first time that a wave 2 could be in already. So since February, that's possible now that this wave 2 could be in, and it would result in a third wave rally. However, I don't have a clear reversal signal to confirm that at this stage. But the structure currently looks a little bit, looks quite similar to what it did back here in April, March 2020. It's a bit different, but it's also a bit choppy, and Natgas after that obviously started to rally quite strongly. So just from a bigger picture, we always need to differentiate between scenarios on, let's say, the daily time frame and on the hourly time frame. Because if we go into the hourly time frame, we have much more fine-grained analysis, much more detailed wave counts, and also, where you have for example, a bullish and a bearish scenario on the daily time frame, you will have the same on the shorter time frame as well. But here on the daily, we are in a situation now where we could say, okay, if we now see certain impulses to the upside, it would certainly be possible to have the wave 2 already in. But until we see that, it is still very likely to get another low, and the downside pressure is still very much there. However, looking at some of the indicators on the daily time frame, we can see that they are looking more and more friendly, actually. Here, for example, the MACD did cross bullish on the daily a few days ago. We're in the bullish range on the relative strength index. What might be even more meaningful is here on the weekly chart. On the weekly chart, we can see that the MACD is pushing higher, and we also had a bullish crossover on the weekly RSI. And what I also always find very useful is the 2-week chart, also getting quite friendly. Also bullish crossover on the RSI. And the monthly chart is always interesting because you will remember it, a lot of new viewers since then, but you will remember it from December last year when we said, I think it was pretty much here, when we said, okay, typically when the monthly MACD crosses bearish, which it did, then we have to expect another 60-70% drop. And that's pretty much what happened. That was a pretty good and fairly clear and straightforward forecast. Hopefully helped a lot of people back then. But now it's starting to turn around now for the second month in a row. We start to reduce negative momentum on the monthly. But at the moment, the move down here still looks a bit like a bear flag. It's not entirely clear yet, okay? Again, we've come down deep enough. We don't need to go any lower. It's just that we don't really have that reliable reversal signal yet. So now let's take a look at the bullish and the bearish scenario on the, let's go to the 4-hour time frame here, highlighting here that we are in this range, or maybe just zooming out a little bit just to highlight, okay, where are we in the wave count? Off this high in June 22, we had an A wave down, a B wave up, and we're now in the C wave down. That could get one more low. Yeah, the idea could be that here wave 4 topped here in March. Then we are now moving down in this ending diagonal in the yellow wave count. Again, it's not confirmed yet, will really only be confirmed below 195. Or, and that's also possible, we could get here wave 4 as a triangle, and we break down a little later. This is certainly, these are two short-term bearish scenarios, and they are valid as long as price stays below 269. A break above 269, okay, would not invalidate any bearish options, but would certainly allow for a rally to the next resistance point around $3. Going above that level, however, will make direct downside from this structure basically not possible anymore. Now it can still go down, but it would not be that structure. We could then look at the possibility that this is a higher wave 4, yeah, in a larger ABC structure, or that we're already breaking out, obviously. I mean, looking at the indicators, it could very much be that the low is already in. It is very hard to say at this stage. There's a bit of uncertainty because we are not moving in an impulse at the moment. We're in a correction here. We're in a range. Had a comment in the last video, a question, obviously the situation is fairly unclear, yeah, short term, because we're in a range. The market itself hasn't made up its mind yet. So, how would I trade this personally? I would not trade this personally because we are in a range. If you're a range trader, you might really be doing really well here, but I'm not really a range trader. There is not really a 1-2 setup that I would like to take advantage of, so I'm not trading this, because it's just too uncertain, right? I mean, charts aren't always clear. You need to understand that when we are ranging, there are multiple options, and then we just need to wait for a breakout and a move above one of the pivot points indicated that are revealed by the analysis, and then we can go with that wave count. When things on a shorter time frame are unclear, I mean, you can always, in terms of setup, you can always go to the higher time frame, and this is a crystal clear 1-2 setup here on the daily time frame. Yeah? Just you need to, ideally wait for a reversal signal down here, but it is a 1-2 setup, which can be traded the third wave to the upside. This is much clearer and less messy than the 4-hour chart, for example. So, if the lower time frame is sometimes, is messy or fairly unclear, or a decision hasn't been made, you can always trade the larger time frame, for example, or move into a different time frame that's a little bit clearer. And sometimes it's just good and important to wait for an opportunity. You don't always have to trade something if the setup is just not there. Okay, and hopefully it comes across that this situation here at the moment is a bit uncertain, but we're waiting for either a breakout above 269 or a move below 195. And it seems increasingly likely now, with touching the ceiling again, that it might break above 269. But without it happening, we can't really say. Yeah, what else to mention? Yeah, let's look at from a bearish point of view. I mean, the micro count is pretty much here. You have the yellow wave 2, which could have peaked here at any time, or might have peaked here actually at 269. This would be most likely a WXY structure, so a 3-wave move up in a wave W, an X wave down, and a Y wave to the upside. That is certainly a micro count that applies here. That is possible, and then we would now be heading down in a third wave. This is the sub-wave count if we really break down, but it would need to take it below 195 to confirm, and that's another possibility, how would it actually look like if we indeed break to the upside? Going higher could involve here a series of impulses, in my opinion, unreliable, but still we want to explore that option. I want to tell you what you need to be watching out for. So I would then count the move of the low here, of the April low, as a wave 1, then an A overshooting B, C wave down in a wave 2, and then obviously it would move higher like this. Let me change the color to orange. Let me change the wave degree. I just want to show you how also the sub waves would look like. And then we could say, all right, we have obviously another 1-2 setup here, And we could say, okay, we had 5 waves up here in this wave 1, another wave 2 to the downside. And then we could now be in something that you could call a third wave rally. So it would ultimately be 3, 4, 5. 1 second, I will change the wave degree here and then move things around a little bit. So yeah, it would then, just the orange count is a short-term bullish count, yeah, how this could play out. But it needs to confirm it by breaking above 269. So a 1-2-1-2 setup basically. And then what would this be? I mean, this could be a third wave to the upside, but it's, where would it need to go to? You know, where would that orange third wave need to go to? Ideally to the 1.618 extension. So target for the orange third wave, and also to have more credibility that this is actually moving up, it would need to go to $3.19 as a minimum. That would be the minimum target that I want to see normally for a third wave. So yeah, how would that look like? I mean, again, you could say that we had here a small wave 1 to the upside. Yeah, 2. This could be a third wave, now a fourth wave, and then a fifth wave. But the problem is, to get to $3.19, it would need to be a very extended fifth wave. So it's not a reliable wave count, this direct bullish breakout, but it's of course a possibility. So ideally that third wave reaches that 319, 320 level. If it doesn't even get there, it might as well break down again. But yeah, this is sort of the situation on the Natgas chart. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.